Today we will discuss about the functions of stock exchanges. Secondary market is the market for existing securities and it is commonly known as stock market or stock exchanges. That is, the stock market or stock exchanges are the secondary market. Primary market is the market where the new issue securities of the new issues are available. When the secondary markets are the markets for the existing securities. There exist two types of markets, security market. The first one is the primary market and the second one is the secondary market. Primary market mainly deals with the new issue. That is, when a company or firm issue new shares or securities, then it is traded in the primary market. After that, every activities or every trading will happen in the secondary market, or secondary market is the market for the existing securities. That is, trading of the newly issued securities only happens in the primary market, whereas in the secondary market all the tradings after this first issue happens, all the trading after the first issue happens in the secondary market. This is the main difference between the primary market and the secondary market. Therefore, secondary market is a market for existing securities and it is commonly known as stock market or the stock exchange. And in India, the stock exchanges are regulated by the Securities Contract and Regulation Act 1956 and it is by the Securities Exchange Board of India. And stock exchange is an organized, controlled market where securities like shares, debentures and bonds are exchanged at mutually agreed price. That is, stock exchange is an organized and controlled market where securities like shares, debentures and bonds are exchanged and at mutually agreed price. The functions of stock exchanges are given here. First one, ensure ready market for securities. This is the first function of stock exchange or the security market, that is ensure ready market for the security. Second one, facilitate yardstick for the evaluation of securities. That is, the evaluation of securities also happens in the stock exchange. Then third one, encourages capital formation. That is investment, all types of the investment happens in the stock exchanges and that investment can be used for the capital formation. Then another function is provide safety and security of investment. Provision of the safety and security of investment is another important function. Then it promotes fair dealings by the corporates. Fair dealings by the corporates can also be is the fair dealings by the corporates is the another important function of the stock exchange. Another one, it facilitates public borrowing. That is, in the stock exchanges, this borrowing can be undertaken. And next one, provides clearinghouse facility and it facilitates healthy speculation and it serves as an economic barometer. Then it provides a benchmark for the valuation of securities. That is, benchmark for the valuation of securities as well as valuation and evaluation of the securities. Everything happens in the stock exchanges. These are the functions of the stock exchanges. Then characteristics of stock exchanges are given here. It is a marketplace where shares and bonds are bought and sold. That is, it is a marketplace where bonds and shares are bought and sold. Second one, it is an association of persons. That is, here these stock exchanges are an association of persons. It operates as per the direction of the government and SEBI. SEBI is the Securities Exchange Board of India. That is, it functions under the guidance and direction of the government and SEBI. Then another one, it provides a ready market for securities of the corporate, government and trust. In this market, we will get the securities of the corporate, government and trust. Another characteristics is that the dealings may be either for investment or for speculation purpose. Here, two types of the dealings happens. One is that dealings may be either for investment or for speculation purpose. Second one, it deals in shares and securities of other organizations. There is stock exchanges deals with the shares and securities of other organizations. And next important characteristics is that it never fixes the price, but prices are fixed by the demand and supply. Now, these are the characteristics of the stock exchange. That is, it is a place where shares and bonds are sold. It is an association of persons. It operates as per the direction of the government and SEBI, and it is a redeem market for the corporate, government, and trust. The dealings may be either for investment or speculation purpose. It deals in shares and securities of other organization. It never fixes the price. Some of the important stock exchanges in India are Bombay Stock Exchange, National Stock Exchange, and Over-the-Counter Exchange of India. These are the three important stock exchanges in India. Bombay Stock Exchange, also known as the Stock Exchange Mumbai, is one of the oldest stock exchange in all of Asia, dating back to 1875, when it was known as the Native Share and Stockbrokers Association. And the exchange is operated through a unique and proprietary computer system known as BSE, online trading, or BOLT. The corporate office of the BSE is situated in Delhi Street, Mumbai. That is, it is the oldest stock exchange in India. It was established in 1875, and the trading system is known as BSE online trading system. It is known as BOLT, and the corporate office is situated in the Delhi Street, Mumbai. Second important stock exchange in India is the National Stock Exchange, and National Stock Exchange is India's leading stock exchange. The BSE is the oldest and NSE is the leading stock exchange covering various cities and towns across the country, and it was established in 1992. And it was set up by leading institutions to provide a modern, fully automated screen-based trading system with national reach. And the exchange has brought about unparalleled transparency, speed and efficiency, safety and market integrity. That is, in the field of security market, the exchange has brought about unparalleled transparency, speed and efficiency, safety and market integrity. It has set up facilities that serve as a model for the security industry in terms of the system practice and procedures. And another important type of stock exchange is the Over-the-Counter Exchange of India. It is incorporated in 1990 under the Companies Act of 1956, and it is recognized as a stock exchange under Section 4 of the Securities and Enterprising Promoters Act 1956. And the exchange was set up in raising finance for new project in cost-effective manner and to provide the investor with a transparent and efficient mode of trading. And the exchange today has 115 listing. It allows the listing of small and medium-sized companies. This is one of the important peculiarity. That is, it allows the listing of small and medium-sized companies. This is Over-the-Counter Exchange of India. It doesn't have any office or anything, and it's like a regional stock exchange. In this section, a brief note about the powers and functions of Securities Exchange Board of India. SEBI is the regulating mechanism of the securities market in India is given, and SEBI was set up on April 12, 1988, and it came into force on 10th January 1992. It was set up on April 12, 1988, and can come into force on 30 January 1980. It extends to the whole of India. And the major objective of SEBI are to protect the interest of the investors in security, promote the development of security, regulate the securities market, etc. Major objectives are given here: to protect the interest of the investors in security market, to promote the development of securities market, regulate the securities market. These are the important objectives. And powers and functions of the security markets are given. Powers and functions are divided into two: the regulatory function and development function. First one, regulation of stock exchange and self-regulatory organization, registration and the regulation of stockbrokers, sub-broker, registrar to all issue, then merchant brokers, underwriters, portfolio managers, and such other intermediaries who are associated with the securities market, registration and the regulation of the working of collective investment scheme, including mutual funds, then prohibition of fraudulent and unfair trade practices relating securities market, prohibit insider trading, etc. The regulatory function, that is regulation of stock exchange and self-regulatory organization. Second, registration and regulation of various intermediaries functioning in the securities market. They are the intermediaries are named as the stockbrokers, sub-brokers, registered to issue, merchant bankers, underwriters, portfolio managers, etc. Then third regulatory function is registration and regulation of the working of collective investment scheme, including mutual fund scheme. Then another one is prohibition of fraudulent and unfair trade practices relating to the securities market. And fifth one is prohibit insider trading in security. And these are the important regulatory function. The development functions of the SEBI includes promote investors education. There is a development function, training for intermediaries. Then promotion of trade fair practices, code of conduct for self-explanatory organization, promoting self-regulatory organizations, conducting research and published information useful to all market participants, etc. are the development functions. Here a brief explanation about the Securities Exchange Board of India is given. It was established on set up on April 12, 1988 and started in function 30 January 1992. And the objectives are given. Powers and functions can be divided into regulatory functions and development functions.